Saturday, August 1st, 09:49 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. First day of the new month. So we do a wrap-up for the month of July. Commodities. Look at the monthly time frame. See where we are and how we got there. There's several categories in the commodities. One is energy. So we'll look at the two major financial instruments in energy, crude oil and natural gas. Both are fossil fuels, dirty, toxic forms of energy. 10-year chart. Each is a monthly time frame of data price action. I have 10 years of history of crude oil. Let's actually take this back. Got 20 years. There we go, 20 years. For the past 20 years, the high was 2008. The low was 2020. Are you aware of the big situations that occurred both those years that caused those prices? It's just a question. You can pass on it if you don't know it. So now that we just finished the month of July, we made a lower high, lower low. Yep, the crude oil trend is down on the trend. For the month, we closed green above midpoint. So again, the candle itself closed above midpoint of the trading range for that month. That's bullish. We also closed above the close of the prior month. That's bullish. Again, the red candle, that prior month, we closed the bottom of the body. Or a green candle, we closed the top of the body. Yep. So pending reversal on this time frame. We have buyers, again, when we broke the low of last month, when I'm talking about the low, that red month, when we broke the low of it, buyers stepped in here, the month of July, and they brought it up higher. Bigger demand. More people were coming to the party. They thought this was the cool kid party to come to. Yep. Me, I've been in bullish trades, crude oil, using options, shorting options to collect income. I closed one of those positions yesterday, near max profit, and I still have other ones opened. Okay, if you know anything about options, they're derivatives. They have different terms of life. So I closed the one that was closer to expiration, near max profits. I bought at the lows, and I sold at the highs before the lights went on at the club. I'll be looking to add to it on the pullbacks of weakness. So now we're looking at natural gas. I have bullish positions on here too. I bought at the lows, big gains. I'm not looking to close early because, again, I'm expecting more gains come in to close for higher profits. And I'm also buying on the pullbacks. When I say buying, I'm using options. So I'm actually shorting puts. I don't care to buy stock. If you ever trade stock, have you ever traded long or have you ever traded short stocks? You only have a 50% chance. Proprietary. You only have a 50% chance buying long stocks or shorting stocks to win. I trade options, selling to collect income, give me a 70% chance of success. That's the real basic understanding of it. So we're looking here. Let's put this on a longer time frame. 20-year chart. Look at the top left, 2008. The bottom, 2020. Yep, big range and price action, just like crude oil. So natural gas for the month, lower high, lower low. The trend is down. Yep, we closed below that prior month. And a little wick on the bottom, we have buyers stepping in here. Again, we're not in a high demand season. Often in the winter months is a bigger demand for natural gas. Sure, all year round there's a demand for natural gas, but it's also seasonal based. In the winter or cold environments, it costs more and you use more energy to create heat. Again, scientifically, because some people don't understand science, don't believe in science, science has proven again that you need more energy to create heat than you do for your cooling systems. So that puts a bigger demand on energy regarding if you get it from whatever source. Natural gas, crude oil, coal, solar, good luck. They're all expensive at this time. Yep. Let's go to the next category. Again, I told you commodities has several categories. Metals. Now, metals, very broad on the usage of metals. All metals have some kind of industrial use need. Yeah, all metals. Gold also is not just for jewelry. It has industrial need. And based on the economy of the whole planet and also different countries, because their technology and their industry will have more or less demand for certain metals. Again, some places are storing metals for future use for industrial, not just for wealth or for what they believe is a safe haven. It costs a lot to transport metals. They're heavy. Hello. And it costs a lot to store them. Need a big facility to store them, plus security. You know, there are people in the United States that go steal people's copper. Also in other countries. So we're looking at gold. Let's put it for 20 years. There we go. Bottom left, 2005. That was a low. So for the month of July, we closed with a yellow candle. Yellow candle means we didn't take out the higher low of the prior month. Also call them inside candles. Yep, nice. So we closed hollow. Hollow is equivalent to a green candle. So since we closed above the open of July, we also closed above the close of that red candle. That's nice. That red candle was the low of the year. So now we're making higher lows, potential, move to the upside. I am in bullish positions. I actually added several times in July to my bullish positions. Shorting options, aka shorting put options to income, still in those, and I have gains. Yep. Now I was considering to do the trade, the bullish trade on silver. She was looking prettier at the line outside in the club. But when I was doing some further research, gold was looking more hotter. How do you like that comparison? Yep. And I'll show you the correlation between them both. So we know from prior charting, technical analysis, TA, inside candles mean indecision. Again, the bulls or bears, the buyers, the sellers don't know what they want to do here, go higher or lower. Maybe they're looking at charts, maybe they're looking at economic data. Yeah. So again, inside candles mean indecision. That also means potential halfway point to a continuation downside and potential reversal. Again, I'm not marrying this position. I'm trading it, managing it. I have targets for price, profits, and targets for stop loss, taking a loss. Yep. Let's go look at the silver. Bottom left. Can't even see it. I'll actually put this on 20 years. There we go, 20 years. The low was even further back then. And the all-time high was this year. And look what silver did this month. It actually made a new low for the year. So silver is more bearish, loser, They made a new low for the year. Again, let's say this together. 1, 2, 3, loser. Silver is not the cool kid in school to be hanging out with in the sandbox or in the lunchroom or the break room. Yeah, I'm sorry, but that's the comparison I'm going to be saying. You might want to go see a guidance counselor and call me out if you're having problems or get mental health. Again, silver's a loser. There's less demand in silver. Less demand, the price is getting marked down. This is how markets work. Marked down. So again, new low for the year. Less demand, less confidence, and could be other geopolitical reasons too. But the fact is, the chart is showing price action. Last prior red candle, huge panic selling, huge dump. And this month of July, look what happened. We closed red near the low of the July candle, more bearish. We also closed below that June candle, more bearish. We did a retracement. See that wick? Test it, rejection. Yeah. Less confidence. So I made the better decision going bullish on the gold. I might be early to the party, the cool party, but I'm collecting income. Again, if I trade stocks, you only have 50% chance to be winner. If you buy or sell call options, directional, you only have 50% chance of success. I'm doing credit income, selling short put options for income, give me a 7% chance of success. Again, I'm using charts to determine what side of the trade I want to be and where I want to get in at. But also notice a smaller trading range, just like gold. So there's less panic in both of them versus the huge panic the prior month. So buyers, and also it's market sentiment. People typically look more at gold than silver. So it makes sense that the gold would be having the earlier turnaround, but doesn't always happen like that. It has been silver sometimes. Let's go to the next metal. Okay, here we are, platinum, bottom, low, the low of past 20 years, 2020. And this year was the high. Yeah, very interesting. Again, the low was not that further away versus gold and silver, lower 20 plus years again. And look what we did here. We made a new low for the year. It broke the low of last month. So I'm going to update this now. The low is 1539.60. Again, smaller trading range this month. So not so much panic selling where that prior red candle, huge panic selling. Wait, let's just double check the low. 1547.7. Yeah, so the green candle for July was a new low, lower high. So the trend is down, but we closed green above midpoint for the month. That's bullish. We also closed above the close of that red candle. Again, the red candle closing the bottom. So that's nice. Potential reversal. Trend is still down. Lower highs, lower low, but potential reversal here. But the better one is gold because it didn't take out the low of last month. Again, I'm partying with the cool kids. Wonder what kind of degenerate drugs those knuckleheads are doing. You know how those certain groups want to party with the wrong junk. But not everybody there is doing that. Again, that's why I trade shorting options for income instead of going directional. Again, new low for the year. And we're going to look at copper, one of the most important metals for industrial. Bottom left, can't even see it all the way back. 2004 was the low. This year was the high. Copper is a big indicator of economy still in the bullish direction. Why? Copper is used for so many things. your appliances, washer and dryer, HVAC system, cooling systems for other industrial use, mechanical issues for engines, electricity, your copper wiring. Again, huge demand for copper. Now, in bad economies, it'd be less demand. Still, and it's showing us the leader. Look at the trend up. And for the month, it closed inside candle. For prior month, inside candle. We're building a wedge. Nice. So this month we closed near the high of the trading range. That's bullish. We also closed above the prior close. Nice. More leaning bullish bias. Copper mining. And that's the category of metals. But I want to show you, because I just mentioned to you, silver made a new low for the year. We're gold in it. So we'll dissect this, and I'll show you partly what I show my VIP members in my Patreon. First, we'll look at gold using multiple time frames. The far left is the monthly, the middle is the weekly, and the left is the daily. So the far right, we already see gold inside candle for the month. The weekly, yeah, we made a higher high, higher low. We are in a consolidation down here, building energy for the next trend. And the far left daily. Excuse me. So the far left daily, look at this huge consolidation over the past weeks. Yep, nice. The trend is up. Good choice I made. Nice. So let's look at silver now. Now this is interesting. Middle chart weekly. We have a dodgy candle, but made a higher high, higher low. Yep. Explain that later just to my higher Patreon members, what I'm seeing occurring there. So let's go to silver now. Just compare it. Same time frames. Far left daily, middle weekly, far right monthly. Again, the monthly we know made a new low for the year. The trend is even more confirmed lower. Weekly chart, inside candle, solid body, equivalent to a red. That's bad. We closed near the low Friday for the week. We also closed back inside the range of that prior candle. And the daily chart, inside candle. Wow, a lot of inside candles occurred. Yep, that's more bearish. Let's go to the next category. Grain products, another important commodity. Ten years of history, corn. Corn. Food product for humans. Food product as grain, seed product for animals, livestock, and also a food product that's used for ethanol. Several usages of the commodity grain corn. And for the month, we made a new high for the year. Yep. Let's zoom back out, sorry. So there's a low for the past 10 years. 2020, the high was 2022. Actually, I have a big consolidation occurring here for the past 3 years. Trading consolidation. It's like barcoding. Buy the lows, sell at the top. Green candle here made a new high. We took out that swing high and sold off. But we did close green above that prior. Nice. So again, still bullish bias. 10-year chart, rough rice. Strong trend to the upside. Makes sense. Yep. Again, so much of the world population consumes rice and beans. Not the best food staples, but cost lower than livestock. New high for the year also in corn. Wheat, another huge food staple for Europe, Africa, Western Europe. New high for the year. Soybean oil. Lower high, lower low. The trend is down. Huge retracement of that red panic candle. Panic selling. Rejection. Big trading range the last 2 months. soybean meal actually made a higher high than last month, rejected it. So it's in a big consolidation of barcoding. In soybean itself, a lot of price activity in soybean across the board. Interesting. Higher highs, rejection. Yep. Again, it looks like it's doing a consolidation staircase at a higher high. Now let's go look at another part of commodities. The other category, livestock. Live cattle. New low for the year. The trend is down. Big wick on the bottom. Buyer stepped in here. Extremely expensive. Look at the lows of 2020. Yeah. Cattle, beef is expensive, but more demand for it. And there's a short supply of it. Feeder cattle, inside candle for the month. So that means, again, potential reversal, potential halfway point, indecision, more likely to the upside. And lean hog, the other white meat. Higher high, higher low from that red candle. Again, rejection up there. You see, again, lower highs for the past several years, higher lows. Building energy for like a coil. Again, commodities in the commodities market, not just the financial markets that I just showed you, but in the worldwide trade business, commodities are priced in US dollar. Some people hate the US, some people hate the US dollar. And a lot of those haters use US dollar to do business. I'll give you an example. Communist Vietnam, communist North Korea, also, let's compare those to, let's say, North Sea oil in Norway, which is a democracy that is capitalist, has a stock market. They're one of the oldest members of NATO, again, but they also, just like the United States, they have some social structure policy. They're a member of the EU. Well, they have a big commodity called the North Sea oil. They produce and export. So if they're selling that oil to, let's just say, Vietnam, communist Vietnam, or to the Democrat country of India, they prefer to do that business deal in dollars. They don't want the Indian rupee or the currency of Vietnam. So they'll provide that North Sea oil to those countries, and those countries have to pay in US dollars. Got it? Why? Because the US dollar is much more stable, much more safer. It's also internationally recognized. Yeah. So many countries and their central banks hold reserve dollars. And many companies internationally do too for business deals. If you're in, let's say, Italy, and you're importing coffee beans from Ethiopia or coffee beans from Venezuela, Italy will have that transaction most likely in US dollars. They'll pay US dollars because those countries, Venezuela, Ethiopia, may not want the euro. Got it? So you understand the commodities are priced in dollars. Well, when the dollar goes up higher, it often has the inverse for commodities. On a separate video, you can see the currency videos. The US dollar had a huge sell-off this past Wednesday after the FOMC meeting, and that also had a decline in the dollar price, which inverse brought commodities even higher. That's another situation to be aware of. If the dollar goes weaker, we can see high prices of commodities. You may want to pre-stock your fresh coffee beans, your wheat, your rice. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching. Thank you kindly for your support.